Well, we were talking of increasing credit demand in the country a little earlier, pushing interbank rates higher. What's your view on what we're seeing play out in the markets right now on the macroeconomic front?
Good morning. I think we've seen slight appreciation in the naira. On the FX side, and as you've pointed out, increased interbank rates. I think that's a reflection of two things. I mean, there is definitely more demand than there is supply, but also I think at the moment with the current risk environment, the banks are pretty adverse to lending, and even in the interbank market, there's a reduction in supply. There's a tendency towards being very conservative around Treasury policy, and I think that's what we're seeing in the interbank market rates.
And that big picture spelling what exactly for banks where many of these players have become increasingly wary of lending?
Sorry, could you repeat that? I didn't get that.
This spelling what for the banking players in Nigeria right now at a time where many of them have become increasingly wary of lending?
Yes, I mean, I think it's two things. One, clearly, with what's going on in the sector, there is a focus on risk management. There is a focus on asset quality. And one of the short-term effects of that must surely be that there's a restriction or constriction in lending. And I think we're seeing that quite clearly. So I don't think, given the framework, that what we're seeing is unusual.
At the same time, we've had Governor Lamido Sanusi directing banks to appoint chief risk officers as they grow so that they'll be able to take on several risks that they've not been too familiar with in the past. How have the banks actually reacted to that suggestion?
I mean, I think it's a very sensible suggestion. I mean, if you consider how quickly or how rapidly the banks expanded in the 2005 consolidation period, went from a capital of 2 billion to 25 billion. That's huge. That's a plus 10-fold increase. You've got to grow your risk capacity at the same rate. Otherwise, you just have impairment in asset quality, and you have it's a contributory factor. It's not the only factor to what we're seeing, but it's a contributory factor to what we're seeing now in the banking sector with the huge write-downs. So I think what he's saying is, I don't think any bank MD or any bank shareholder will be averse to upping risk. It's the only way really that you can operate a banking sector profitably.
Let's take a look at
given the huge growth that we've...
Sorry to interrupt, but let's take a look at the fallen five over in Nigeria. I mean, some analysts argued prior to the markets reopening on Wednesday after your public holidays over on that end that those fallen five would experience a run. And certainly we have seen that coming to the fore. Many of these players holding more firmly in positive territory than some of their other counterparts within that space. Has this come at a surprise at all, given the fact that these players had fallen so hard in the first place?
Yes. I mean, the market at the moment, or the market of as you said, since last week, we did see something of a rally. We saw a little bit of upward momentum, but we're seeing that come to an end now. We're starting to see supply pressure build up, and I think we saw that yesterday with First Bank losing 5%, GT, which is really the darling of the sector at the moment, ending on the losers chart, albeit marginally. So I think that's probably run its course for now. And we think the market may begin to trend downwards in the next few trading sessions. Particularly with the holiday, it's quite a short week. Yeah. Sorry, Alishia, the sounds, I'm struggling, sorry, but go on.
Well, certainly in the news, we're reading a story that shareholders of Nigeria's Diamond Bank has given the approval for a capital raising initiative of up to 200 billion naira. What do you see uptake being like, whether this bond tries to raise capital by issuing equity or through the bond market?
I think we've been through the worst. I think Diamond Bank has a unique strategy, has, remember, quite a strong institutional shareholding, And depending on how the instrument is priced, I think there could be take-up. I understand that it's a mixture of fixed income and equity. I think there could be take-up. And it's one of the banks that's come out quite well from this sort of sector review exercise. And I think the market's coming back. I mean, there's pension money, there's insurance sector money, there's money that's got to be invested and got to earn a return. And the market is far more discerning. We've learned our lessons. We'll look at the fundamentals. But the fundamentals of Diamond look strong. And it's not a huge amount, so I think that there will be uptake, there will be buy, depending obviously on how it's priced.